This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's take a look again at the gold market. The gold market still calling inside of the Friday's range. We have discussed this moment that market stands inside of the range of this Friday's high wave pattern. That usually indicates that market is building an energy and ready for the breakout. Maybe the market participants expect the tomorrow non-farm payroll release that based on the ADP data it could be the real surprise to the upside, and as that was reported by the ADP that market has created 198,000 of new workplaces, and that is greater than market expects in general based on the data that we will see in the expectation number of the non-farm payrolls. So maybe the breakout will follow on tomorrow because today is Thursday already. The market still stands in the tight range. Very often at the noon and the eve of the significant data, the opposite move happens. And although on the daily time frame, in fact, we do not see any significant moments, and the picture almost is the same as it was yesterday, but still the one nuances exist. And that nuance is this piercing of the lower body of this bearish pennant. That is some sort of the failure breakout, and that Jack Schwager calls as the bear's trap. So when the bears enter the market by the stop orders or in the direction of the breakout, they appear to be trapped with the wrong position because that was the failure breakout. Market returns right back. Very often after that, the opposite breakout could follow. And from that perspective, I would like to return now to our discussion in the beginning of the week that we said that three possible scenarios here. First of all, this is the common ABCD pattern. That, as I said, not the favor scenario because this stagnation of the price action right in the beginning of the CD leg, that should be in fact impulse leg. It's not natural. So that is not very typical for the development of the ABCD pattern. Another scenario was that I prefer to see here is the double bottom pattern. Okay, and this scenario is still good possible. But the third scenario was and is the butterfly buy that could appear here. So if market will show this breakout of this pennant to the upside after this failure breakout and will show the deeper move to the upside, that could be the butterfly. So this could be left wing, that could be right wing. The market could show the reversal patterns still on the daily time frame and follow to the greater retracement back, because if this will be indeed real upward surprise on the non-farm payrolls data on tomorrow action, that probably will lead to the gold depreciation, since US dollar could appreciate on this upward surprise. That could lead to the strong move to the downside. Why not? In this case, this could be really the butterfly. So anyway, today we will focus on this pattern, but in general keep in mind that this could be the butterfly buy, and the retracement to the upside has not been eliminated yet by the price action. So it is still possible. Only if market will take out this low and will show some significant downward acceleration, we could say yes, probably retracement will not happen. Market is too strong, even stronger than we expected, than we thought. And probably it's really strong bearish power inside of the market. But currently, as the situation with the double bottom is possible at least theoretically, as the butterfly buy is also possible here. So that's the pattern that we should keep an eye on the gold market. Now let's shift to the 4-hour time frame. On the 4-hour time frame, we see this failure breakout of this our triangle pattern. Also take a look. That is the 2-period stop grabber. So market has shift trend to the bearish right here and then returns right back. That is also the stop grabber, guys. And this stop grabber assumes the taking out of these highs. That's why I think that this is upward breakout will follow. Will it be the true breakout, or will it be just grabbing the stops above these highs, above the weekly pivot point, since it hasn't been tested yet, so market by this splash up could test the weekly pivot point? I don't know. But what I do know is that market probably will take it out of these highs. This will be the new high, either with stronger move to the upside or just for wash and rinse of these highs or returning right back. So keep an eye on this development. So if you would like to enter short, don't do it right now. Wait how market will behave first around these highs. If this will be just the clear round of these tops and market first will return back fast with a strong candle to the downside, that probably will be the wash and rinse, and you could try to take the scalp short position with taking out of this lows continuation to the downside. But if market will grab these tops, move above the weekly pivot point and hold there, wait for the further upward acceleration. And how deep this acceleration will be, we could understand if we will take a look at the hourly time frame. On the hourly time frame, sorry guys, here it is. On the hourly time frame, what we see, that our triangle has turned to some sort of the rectangle consolidation. This significant resistance area that was previously support, market tested it, again tested, pullback, breaking to the downside, 1, 2, 3. Now trend holds bullish. By the way, on the hourly time frame here is also the bullish stop grabber. So we expect that market will take out these highs. If it will follow to the upside, we could apply the classical target estimation for the rectangle breakout. This is the height of the rectangle counted to the upside in the direction of the breakout, and then it gives us the level around 1605, 1603. That is area very close to the weekly pivot resistance 1 and higher than the 618 resistance of that swing. Okay, so that is very common level. It's around 768 resistance. That's very typical for the butterflies, and that's why I think that overall price action suggests that the butterflies really could appear. So that's been said, on the daily time frame, retracement is still possible, despite the a bit curious price action, and that's market stance and in fact tight range in building and energy. Usually after such thought of the price action, market shows significant acceleration in one or other direction. Since market has shown here the failure breakout, and that was simultaneously the stop grabber, some move could happen to the upside. First, we have to watch for these highs. If market will just grab the stops and returns right back inside of the consolidation, we could expect at minimum move to the opposite border, or even possible challenging of the daily lows. If market will break these highs and hold there, then expect move at minimum to the 1603, 1605, and that will increase the probability of the butterfly pattern on the daily time frame. That is still possible, especially if tomorrow we will see the upward surprise in the non-farm payrolls data. So that's our current view on the market. Be careful, since gold market, especially before the significant news, this is really the task to trade this market in such environment. So keep an eye on these levels and the scenarios that we have just discussed, and we'll see how it will turn.